Good morning, everyone. There is a very important message I want to give you before we move on to the S&P 500 analysis. Last Friday, the market corrected just very slightly, between 2 to 3% depending on the index you are looking at. And I hear a lot of noises on the TV show, on investment forum, everywhere. Everybody's panicking. Thinking this is the end of the bull market. Now we're going to go and see for a sharp correction. We're going to see hell coming, and so on and so on and so on. And a lot of people already see a lot of pain because the market corrected between 2 and 3%. Let me tell you, if this is what you really think, then maybe investing in the stock market is not for you. I mean, a pullback of 2 or 3% is nothing for equity investment. I've been through all the major financial crisis of the last 20 years, like the 2000 crashes, the 2008 crashes, the 2020 crash, the 2022 crash. I mean, we are talking about 50, 30, 40% crash. And in between, there are a lot of correction happening. And every single year, between 10 to 15%. And we have many pullbacks of between 5 and 10%. So 2 and 3%, this is nothing. Of course, there has been a peak in volatility if you look at the VIX index, but this is nothing to be panicking. I mean, the bull market is still very intact, and we're going to see when you look at the chart of the S&P 500 as the same as we look at the chart of the QQQ in the previous video. I invite you to check this previous video, and we can see that there is no reason to think that we are going to see a sharp crash in the stock market. Now, having said that, let's move on to the S&P 500. So the biggest question right now is the S&P 500 overvalued or undervalued? And we are going to see through the different aspects that we're going to go through: fundamental analysis, technical analysis. We're going to see what happened in historically, and we're going to see what is the bullish case and the bearish case for the S&P 500. And hopefully, you're going to end up with this session with a clear view of where you sit, whether you are bullish or bearish, and what you can do to take advantage of these two scenarios. Let's go. First of all, let's cover the fundamental aspect and basically the earning growth of the S&P 500. We can see that in Q4 2024, the S&P earning growth has been 16.9% year over year. I mean, let's be honest, this is the highest earning growth we get since 2021. So we are talking about quite a significant earning growth for the overall index of the S&P 500. However, if we look at the expected earning growth of 2025 compared to 2024, we can see that the earning growth expectation is just 12%. So this is a drop definitely from last year. But what is important when you look at earning growth is what you're going to pay for this earning growth expectation compared to last year valuation on the earning growth expectation. What are the main sectors that drove the S&P 500 earning growth? You get a financial sector with above 50% earning growth year over year. So financial, definitely, we have seen a sharp move in the stock price of this company in the S&P 500. You can see also that tech has been quite significantly good on the earning growth. We talk about between 30 and 35%. And the sector that detracted more or less for the earning growth of the S&P 500 last year is the energy sector with a contraction of 27.5%. So should we be concerned that the earning growth estimation of 2025 is much lower than 2024? So to answer this question, it's not only important to look at the earning growth and the fundamental of the S&P 500, but also the valuation of the same companies. So you see how much you are going to pay for the earning growth expectation. Is S&P 500 overvalued? The forward PE ratio for the S&P 500 is 22.2 times, well above the 5 years average of 19.8 and the 10-year average of 18.3. Even worse, the current PE is about 27, 28 times, which is outside the normal historical norm. What you can also see that on the last fund manager survey, the 90% of them estimated that the market is overvalued. So why isn't then the S&P 500 crashing? So you just wonder why the market is not crashing, because it's overvalued. Valuation is one thing, but it's not only valuation you need to look at to predict a market crash. Valuation in itself is not enough. So we have to see what is supporting the current bull market and what can derail this bull market in order to predict, or maybe to have a kind of feeling that the market is topping up and maybe it's going to retrace meaningfully, so you can maybe take advantage of this retracement. In order to do that, we need to look at the technical analysis, of course, of the S&P. Let's move on to the technical analysis of the S&P 500. First of all, I will take the weekly chart. You can see that you have a very long bullish trend since the low of 2023, 22, 23. You see we reached the low there, and since there we have been in a very long bullish channel, and it doesn't seem like the bull channel has been broken yet, because you can see clearly the up limit of the channel here, the down limit of the channel here, and we are still well within the range of this uptrend channel. So I don't think that we should panic, even like we see on the last Friday, that the panic we see is not very warranted. So the key level we have to watch, we can see that the control point is around 437. This is where the highest volume has been. And you can see that the next level to watch out is, and it's coinciding with the more or less the 200 moving average, which is about 460. But what is more important for a more medium-term view is the 55 moving average. We have about 550 points. And you can see that this is not a coincidence. It's also at more or less the same level as the lower band of the Bollinger Band, which is around 574. So you can see here lately that we have seen a bullish flag. You can see that the bullish flag has been drawn in the screen, and we have broke out this bullish flag. We have retested it, and we have trying to break out on the highest for an all-time high, which we've managed on the last week, because we reached 613, which was an all-time high, but suddenly the market rejected it. It rejected it down to the level of the previous candle, which is not very dramatic. You know, people are talking about, yeah, this is volatile, we're seeing a pullback, but nothing really dramatic. You have to bear in mind that we have actually only came back to the last week candle, the low of the last week candle. We have actually came back to only 1 week ago, because the previous week we were actually testing the bear flag limit, sorry, the bull flag limit that you can see here. So definitely nothing to panic here. What we can see also on this weekly channel is that you see the volume is decreasing. The higher we go, the lower the volume. So this is not something that we should take very lightly, because when there is a very, very strong bullish momentum, then the volume should accompany this bullish momentum, which is not the case over here. The volume is actually decreasing. You can see on the volume profile on this side, and you can also clearly see on the blue line that the volume is decreasing the higher we go. So this is something that we need to bear in mind. The price is going up, but the volume and the participation in the market is going lower. What you can also see is the RSI is about 60, 63. This is not the highest level that we have seen, because we have been well above the overbought territory in 2024, but we are still remaining on the area where we see it's quite bullish on the RSI momentum. But what we can see is that you have a trend here. It's quite interesting to see is that we have a bullish divergence. So the stock market is going up, where actually the RSI momentum is going down. This is quite a bearish divergence, I would say, not a bullish divergence, a bearish divergence. So this is a sign that we need to watch out, because when the market usually come up and the momentum indicator is going down, then this is the moment that we can really expect a pullback, a meaningful pullback. But I would say if we have a pullback, we're gonna retest the 574 on the pink line that you can see here. Okay, we tested it already when we were on the bull flag, but I think we could retest it. First of all, we need to retest this level here on the upper limit of the bull flag, but then after that we have to retest the 575. Then if we break the 575, then we have to retest the 55 moving average. As long as we stay above the 55 moving average, I would say you have institutional support, you have big institutional investor that is supporting the market. So I don't think that until we reach the 556 level, we should worry too much about a pullback in the market. But though, a lot of people will still feel a lot of pain, because look at the downside from this level today to the 55 moving average. We are talking about another 8% drop in the market, which I don't think a lot of people are ready for. But this is actually what we had already here, what we had already here, and what we had already here. We have even more than 10% pullback, because here it's about 15% pullback. So the pullbacks is normal. I would say pullback is a buying opportunity. So you have just to analyze the technical as it is. You can, of course, take other indicators into consideration, like the economic indicators, whether you see a recession coming or not, whether the Fed is going to decrease the rate or increase rate or stay on the pause side. And you can see also the employment numbers, whether it's going up and down, to say exactly what the Fed is going or the economy is going. You have to watch out what the tariff is going to impact. And but if you look at purely at the technicals and the chart, there is nothing indicating that you are going to have a crash. You will probably see some indication that you're going to have a correction, but that correction is going to be about 10% before maybe the bull market recovers and continue, or maybe there will be a more significant pullback below the 556. But I don't think that this will happen, because if it does happen, then you can see the liquidity is so thin here that the next level will be on the 460, and there you are talking about we are talking about 20% drop of the market for the more or less the 200 moving average limit. So I don't think that we're going to see that very soon, because again the fundamental has been good, the earning growth has been good. We're still expecting the earning to grow in 2025, and usually when earnings are growing, the markets generally don't collapse that much. So let's see. This is what we really have to watch on the next coming weeks and coming months. Really just be careful when it's an all-time high, and when the market has been so bullish, you have to really be careful. So all right, we have covered everything: earnings, valuation, technicals, key market risk. So now let's bring it all together just to make a summary of what we have really learned today. So earning growth is slowing but still strong. Valuation is stretched, but the Fed rate cut could support the price action if the market sees some weakness. Technicals show an uptrend, but momentum is weakening. Support level matters, and we need to watch the 599, the 575, and the 550 level. So here is the big question: is the S&P 500 still a buy at this level, or is it time to take profit? If we reject the 620, if next week the market go up and we test again the all-time high and it's rejected, so I think that we should see a pullback. And if we break above the 620, then I think the market will hold that level and will continue its uptrend. So if you are bullish or bearish on the S&P 500, please drop me a comment below and tell me what is your view. If you found this breakdown valuable, make sure to like this video, hit the subscribe button, and turn on the notification so you don't miss the next video I'm going to do on a regular basis. So again, support this very young channel. I think you're going to see a lot of insight, and you're gonna see a lot of unbiased analysis. I'm no sponsor. I don't aim to make money on this video. I'm not selling anything. I'm just sharing with you my 25 years of experience as an investment banker, an investment manager. I have a CFA, I have an MBA. I've been working in the industry for 25 years. I've been very successful myself investing, so I have a meaningful portfolio. So I'm going to go in the next video through what investment I have in my portfolio, what is the strategy I'm having, and why I have been successful in the past, and why you could be successful as well. So you need really to click the like button. It's nothing, it's just cost anything, and subscribe and follow the video along the way with me and to this journey of investing. Thank you so much. Goodbye.